Okay, so this is going to be a recording talking about the next major process we're working with in terms of ERP systems, which is going to be the procure to pay process. All right, procure to pay is also we also know it as purchasing. So basically, it's how an organization goes out and acquires raw materials, for or supplies to run its operation. So you can actually think of it as the opposite, or the I guess the mirror image of order to cash. All right, whereas order to cash is uh, we take material from our inventories and sell it to customers and get paid, generating accounts receivable. Um, within procure within procure to pay is we purchase stuff from other vendors or from vendors and bring the material in that becomes an asset to the organization, and then we um, we basically increment our accounts payable. So in a lot of ways it works as we go through this. It'll look kind of similar because we're kind of doing a similar, the opposite of a um, opposite order to cash. But you know, there's things that are unique about each one. So anyway, so we talked about with order to cash process. We talked about this idea of master data, where it's the we have a bunch of we have information we've collected that we use as part of the as when we're creating a sales order. All right, so when we're creating a purchase order, we're doing almost pretty much the same thing. All right, we're going to create a master record for every vendor. All right, so which will be the list of all the organizations we buy from, and then with the data that is most relevant for it. So what is our, what we have in terms of contracts? What's their, kind of what our arrangement with them. Right? And actually, what will happen is within the purchasing side of things, our payment terms are actually um, kind of held in both the purchasing master records and accounting master records. All right, so this is another one of these areas of integration where we see um, kind of the two functions are working together. All right. So the vendor master data, some stuff. There's a couple different things we'll see. General data. Sorry about that. General data, so information about the all everything about the customer, purchasing levels, so names, address, phone numbers, languages, things of that nature. Information about the company code, so accounting information. So we'll have things like currency, payment terms, reconciliation. You know, because really the vendor is a creditor of the organization. Right? And then purchasing data. What's the items what are the important things we need to know in order to purchase something? So our contact people and our delivery terms are pretty, delivery terms and payment terms are very important. All right, and we maintain that within this, what we call the purchasing organization level. All right. Uh, there's a concept within, and this is an SAP concept, of what they will do is they've kind of abstracted the idea of vendors and customers. And it's something they call partners, and there's different types of partners. So a customer is a type of business partner. A vendor is a type of business partner. So you'll see these terms thrown around quite a bit. All right. So there's a lot of different potential business partners and we can play different roles in our processing. All right. So we define that within the vendor master of what the relationship is. So we have things like the ordering address, um, invoice, basically what we do with the invoice and payments, and the actual goods supplier. And what can happen is these can is going to be one organization we're dealing with, or it can be multiples. All right, the organization could um, we could order through one organization, have it supplied from another organization, get invoiced by another organization, and send billing or send our payment to another organization. All right, so there's no, and actually what we see more and more often is that organizations are outsourcing a lot of functions. So what will happen is an organization will, there'll be the accounts, the invoicing and the accounts receivable, can be handled by outside parties, contract out to outside parties. That's kind of what this represents. Right. The material master, the idea is we maintain one of the strengths of the ERP system, the strengths and the challenge in the ERP system, both, is that we have a one set of data that we're managing in real time. All right, so there's one set of data for all the material that we use in the operation, whether it is on the manufacturing side of the house, which is our raw materials, finished goods, whether it's our inventory, parts, supplies, anything we need is maintained in in this we call the material master. All right, and then what we have the ability to do is provide different views of that material master, because what will happen is, depending upon what the material is, we can be, they can have different representations, because we can see it in terms of accounting, we can see it in terms of physical, locations and storage and things of that nature. All right. So we have a lot of stuff, like, for example, there's some things where it can be, certain views are what we call plant specific. So they'll only be in one part of only be relevant for one part of the operation. So kind of a view here, just a little bit of give you an idea of kind of how a material master is set up. The blue is what we call basic data. So it's our basic data of the, for a material, defining a material. The beige here is, the data that is, or the views that we would associate for the material in terms of sales. So, basically, for stuff that basically we are going to be selling. We'll have information around kind of, basically where it's located, sales organization that handles it. Trade and export data is maintained within this as well. We have information just about purchasing, we had talked about. Manufacturing is the MRP 1, 2, 3, 4, and forecasting all deals with the materials. MRP stands for Materials Requirements Planning. And what that is really is focused on trying to figure out your production planning. What do you need? When will you need it? What do you need to make something? When will you need that? When will you need it? And getting it ordered. And the forecasting is dealing with, a lot of times, with your either sales forecasting or manufacturing forecasting. But all these things have relevance, are tied in with the material master. The green represents the physical handling. So the data, so the actual storage of materials can be stored at the plant level, in different locations, multiple plants, multiple warehouses. All right. Quality, depending upon your business, can be a big issue. It's a big issue in the chem industry, where basically material has to be certified to be of have certain characteristics, which is all part and parcel of the physical storage of it. And then finally, accounting. All right, so there's an accounting representation of material, right? Because material is an asset, which is on our books, both in terms of the, whether it's a spare part, whether it's a finished good that we're going to sell, whether it's a raw material that's going to go into the processing. All right. And then, so as you can see, this one, material can be viewed in different ways by different organizations within the company. All right, and that's kind of what the ERP system provides, with this one storage of data. The same one set of data can be viewed in any which way, depending upon what your needs are. All right, so say, for example, the material master view, the basic data. So in our case, our our cases, our case study has, we're talking about NRGA bars. All right, so there's characteristics. The basic information is what's our basic unit or what's our gross weight per box. So that's actually some basic, that's some basic information. But then we also have things around like what will happen at like at the plant level. So, at the plant level, we're interested in like, well, what does it take to make these things? All right. So, and this can vary from plant to plant. Like, for example, plant 1000, our lead time is 2 days, and our standard price to manufacture is $216.80. Whereas in plant 2000, maybe we have a situation where it takes another day. So what will happen is it could be in a plant, you can have shared equipment. And what will happen is you're making different types of products, and in order to change the plant around to from one type of manufacturing to another, that can take some time. So maybe it takes an additional day of lead time to set that up, which actually has an impact on your standard costing. All right. So if we stuff we do here has a price of $216.80. This one has a price of $223.20. Same product, but it has the location implications of the SR. So you've got all sorts of different ways of looking at the data. All right. And then we have what we call a purchasing information record. All right. So this idea of we have material and we have vendors. Right? So we purchase from a vendor. Now the thing is though, we have many materials and we have many vendors. And we can purchase one material from many vendors. All right. Or we can buy many materials from one vendor. All right. So we have, this could be a kind of a two-way relationship depending upon how you look at it. What is created, there's something we call an info record. Purchasing info record is what we'll do is use to link a specific material to a specific vendor. Because ultimately, if we buy from one product is 5 different vendors. Well, that each product, that product to each of those vendors is represented in a relationship. All right, and that's really with this idea of what we call this purchasing info record that's created to kind of capture the data that's unique to this relationship. All right, so it contains price and delivery cost, last purchase order date, last purchase order, the price history, tolerance levels for over and under, some delivery time, vendor evaluation. So some pretty useful information in this. We can create them directly, or we can actually there's capabilities in the SAP system that will let us do this stuff automatically. So if we put a purchase order in, it'll automatically update or create and update the info record. All right, so this is like I said, this is an SAP. This is part of the SAP processing. All right, so we talked before about the order to cash process. All right, so for purchasing, what we have is what we call the procure to pay process. All right, as we said, it's the mirror image, the reverse mirror image of order to cash. All right, so in this case, what we'll do is instead of putting order in, instead of having an inquiry, we have a purchase requisition. All right, and so instead of a sales order, we create a purchase order in which we have multiple line items of material that we want to buy. All right, when the product comes in, when it gets delivered, we have a goods receipt. We'll generate a goods receipt when the material is received and transferred into stock. All right, and that can be, depending upon what particular circumstances. We can have situations where the stuff it comes in, we put it directly on the shelf. We have other situations where something comes in, it goes into quarantine for quality checking. There's a whole bunch of different possibilities and different scenarios depending upon how the process is designed. Then we have an invoice receipt where we receive the bill, and then we have the outgoing payment that gets pushed out. All right, so this is the so as you can see, kind of a similar kind of a similar situation here between purchase requisitions, purchasing, and sales. And this is simply a pictorial representation of this. So as we see, we have a material, internal demand or whatever circumstances. Says we have to buy something. We generate a requisition. Requisition is then reviewed, approved, and used to generate a purchase order. It goes to the vendor. The vendor will then, send us the material. We will receive the material. We'll acknowledge it, log it, register it, put it into inventory. We will receive the invoice. We will match the invoice. We'll match the invoice to what was actually received. And if everything lines up correctly, we'll pay the invoice. And that is the procure to pay process in a nutshell.